Big shout out to Prime XBT for sponsoring today's video. If you don't know who Prime are a platform where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. And the beauty of these guys is you can use crypto, either Bitcoin or USDT, as collateral to trade against these pairs. If you want to find out more about them, then check out the links down in the description. And if you do want to trade with them, then use our codes below to get up to a 7,000 USDT deposit bonus and 25% off trading fees. So thanks once again for sponsoring today's video. Hello YouTube. Hello. Welcome back to our next episode in our trading tips playlist. Remember, first and foremost, nothing discussed today is financial advice. Not a financial advisor. Everything is just for educational purposes only. And now that's out of the way. Today's topic, as you can see on the screen, is what trading strategy should you use? I think this is a big one because there's literally hundreds of trading strategies out there, and everyone will sit there and claim that they've got the best strategy, they've got the best win rate, they've got the best return. But the reality is most trading strategies are fairly good. It all comes down to your risk management and managing the trades, and effectively what suits you as an individual trader, because not everything will suit you. So there's a few factors that you need to take into account really when trying to pick a trading strategy. So first and foremost, obviously, what's going to suit you best. So a few good questions would be, how often can you trade? Are you able to sit at the charts all day and do this full time? Or maybe you're pinning down a full-time job and trying to trade on the side until you can get a bit of capital behind you and then potentially take this full-time. Or maybe you just want to trade on the side. So this is a key question you've got to take into account. So for example, if you are working a full-time job and you're working 10, 12-hour days, then realistically you need to avoid anything that's to do with scalping, or even for that matter intraday trading, because you're not there to manage. So for me, a good scalper, you're taking anywhere between well, I'd say minimum you'd be looking at about 5 trades a day, but you can be looking up to like 30 trades a day as a scalper. But you're in and out. So obviously if you're working full time and you can't manage that, then don't bother looking at scalping strategies. Okay? If, for example, you might work part-time, or maybe you're a stay-at-home mum or dad, then potentially you've got a little bit more time in your hands, so maybe some intraday trading or swing trading. Swing trading, if you are working full-time, swing trading can be a great idea because you're working on the high time frame, you're not working on the low time frame, so you don't need to be in and out. It's a kind of a case, you plan your trade. If you get the entry, you take the trade, and then you set your take profits and you kind of walk away. So swing trading's a great idea. Great for obviously bull markets and just as well for bear markets. Now, once again, covering bull markets and bear markets, what are the market conditions, right? Are we in a trending market? We can see obviously from the March 20 lows all the way up, this was just one big trend. So therefore, a trend-based strategy works best for you here. For the past 12 months, we've been in a bear market. We've been coming back down, and effectively we've been going down and sideways. Now for this is effectively my bread and butter for my range trading strategies. So therefore, I've really capitalised on this last 12 months because I can trade from pre-existing levels that have been created before. That's the beauty of it. So one strategy that might work in a trend environment might not be the best for a range-bound environment. Okay? Now the other things you've got to take into account, and this comes down to psychology, which we will cover in the future. Do you need, for example, a fixed entry and a fixed exit criteria? Or can you actively manage a trade? So what I mean by that is, for example, if you're taking a trade, say for example down here, just as a random example, and you're trading a long trade, do you need to know exactly where you're entering and exactly where you're taking 100% of your profit? And then once you've done that, then you're waiting for your next trade setup to come, and then you do exactly the same again? Or do you have the mentality where you can actively manage a trade and say, for example, you've entered a trade down here, you get to where you believe the TP1 should be, but you see no crazy reaction. So because you're not getting a significant pullback and the market continues going up, well, can you let that ride a little bit more? move your stops to entry, so therefore you're reducing your risk and you're letting the rest of the trade ride. So again, it comes down to what suits you best. Now, some people can't trade like that because some people tend to get over greedy in those sort of conditions. So for example, you've seen the up only market and you might take that same trade up here and you say, well, I'm going to let this ride because every man and his dog is telling me that Bitcoin is going to 100k. So therefore, I'm not going to bother taking profits at a natural level of resistance. I'm starting to see a pullback, but I'm still not going to take profits. I'm going to hold on to this because it's going to 100k. Well, that's an example of someone that can't control the psychology. So therefore, maybe a fixed system in out is much better for you. Okay? And then obviously swing trading, intraday trading, scalping. There's loads of different types. So let's just look at a few examples. So one thing that people ask us is, what do I teach? What do I trade? Well, I trade based on confluence trading. So effectively what that means is I use lots of forms of TA to find a level that I'm interested in taking a trade from. So effectively I want confluence. So I want multiple reasons to take that trade. So if we zoom down here, for example, before the current push up that we have in here, and we've got a trending environment right now. Now, to get involved in this trending environment very early, I was effectively trading the range. So what we can see here is we had a range. Okay? So quite simply, when you've got a range-bound environment, you're just trading the range. Now, there's quite a few trades that you could have taken in here, but I'm just going to use one as an example. So, for example, to get in on this move here before this pump up. Now, did we know that this was going to happen? No, we didn't. So that's first and foremost, this is something to know. But something that I used to get in on this move is confluence. So therefore, what did we have down here? Well, we had a high time frame SR level down here, which we came back into. We also had from the low to the high using Fibonacci, we had a golden pocket. And then for the icing on the cake, we also had, if we use a volume profile here, up to the point where obviously this price action didn't exist. We didn't know it was going to come back down here. But if we use a volume profile here, up to where we also have the value area low of the entire range coming in right here. And what happened? We came into the value area low, into the golden pocket, into a high time frame fresh SR level. And that for me was enough confluence to say, well, there's a long position. Okay, there's a long position up to the range highs. If we got there, we did get to the range highs and we actually got no reaction, as we can see here. We just blasted straight through. So therefore, the trades from down here we can let ride. Okay. Now, you don't necessarily have to trade the same way as I do. There are other ways to get into the same trade. So, for example, you may be a supply and demand style trader. Well, quite simply, if we see from this low here, we've got a high, we've got a high low, a high high, high low, high high. We're in an upward trend. So therefore now we can look at this zone here as a bit of a order block or supply zone. So some people will trade this style of trading. Then they'll move into a lower time frame. We know that we've got this daily order block here, or supply zone, depending on what you want to call it, depending on, who's teaching you. And if price comes back into this supply zone, then you take the trade. Now, it came back into it once, it came back into it again, and on this second time we actually created a higher low, and then we push back out of it. So that's another method. Another method might be you use some sort of EMA crossover strategy. So let's just zoom out a little bit further. So for example, some people do like to use EMAs. Now personally, I'm not a fan of them. I will use them in certain conditions, but I will actually mainly use these on altcoins. And they might just do something simple like a crossover strategy. So we can see here, the crossover actually happened here. So you'd wait for the confirmation of the crossover, and then you got your entry, and then lo and behold, you got this. Now, if you're using EMAs, for example, then this is what I would class as a trend strategy. So while we've been range bound for quite some time, this to me would have been actually a little bit more risky because we have been range bound. And effectively you're range bound until proven otherwise. But in the end, this worked out in your favour. Okay? And then effectively you'd just be waiting for these EMAs to come back together, or you could have different type of take profit levels. That's another version. Now, another way of looking at it is you might, for example, trade divergences on the RSI. So what we've got here is we've got a low, and then we've got a closed lower low. Bear in mind, one thing that people seem to get wrong with divergences is it's based on closed. on candle closures. Okay, this is something I teach. So this is based on candle closures to get a divergence. Now the divergence isn't actually in play right here once you've got this candle closed, because it's not confirmed it as a low. Now once we get up here, then we've got a bit of confirmation. So at this point, divergence traders will go, well, okay, so we've got a higher low there, we've got a low there, so we've got some bullish divergence. So therefore people may wait until we've got up here and then go, right, I'll enter. Again, it's still roughly in the same zone. So this is why I'm not knocking other people's trading strategies. There's hundreds of strategies out there, you know, and effectively they all kind of work and they all have their positives and they all have their negatives. It comes down to what suits you best. Okay? Or you may have seen this divergence and you might say, well, okay, I'll get in on a pullback then. So maybe we'll throw on some Fibonacci. So we'll do a Fibonacci from the low to this wick high. And we can see here, if we zoom into a lower time frame like the 4 hour, we'll come back in and look at this, using Fibonacci with this from the low to this local high. We came back in, we've got the divergence confirmed now once we came up here. So then you're waiting for a pullback. We pull back into the golden pocket. Okay, anyone that understands Fibonacci knows that the golden pocket is a significant level. Come into the golden pocket, that could have been your entry, and then you continue trading the range, or hopefully something more. Bear in mind, obviously, Bitcoin is down significantly since the all-time highs. So when you are this far down, you know, you realistically, you're going to be looking for longs. When you're up here, you're not necessarily looking for longs, so you could be trading the small range. Now, obviously, everything that we mentioned there is high time frame stuff. Now, you could have come down to low time frame to get better entries, but, you know, this is high time frame stuff if you've got the time to do it. If you haven't got, you know, if you have got time to sit there and trade low time frames, then for example you could be zooming into something like this. So we've talked about this on our recent Bitcoin analysis. So we've actually got a small range here to trade. So if you do have time at the charts, then you can be trading something like this. Now again, just using this range fib that I've got here, it's not necessarily use this only. I do need to have other forms of confluence at these levels, but effectively you had, after the first high, this high then was taken out with a swing failure pattern. Then you got a low, and you got another low, and you got another low, and you got another high. So effectively, you had 3, 4, 5 trades in this range so far. Ignoring all the middle noise, but again, this is low time frame stuff. Now, don't get me wrong, it's happened over a longer period of time. You know, from the start of the range to where we are now, this is going over 5 days. You know, nearly 6 days now. Okay, so it's a week's worth of ranging. But if you can't be at your desk to manage this, then perhaps this isn't the strategy for you. So it's all about discovering what is going to work for you. That's what it comes down to. So for example, what I teach on the website, so obviously if you guys don't know, I teach my style of trading on the website. So if you come onto our website, spitfiretraders.com, link to our free Discord down here. And if you come take a look at our Copilot's course, we can see here, then within this, I teach many different forms of TA and various strategies that'll cover anything from Bitcoin, altcoins, FX, to stocks. Okay, so obviously we can see there, it's glaringly obvious the price that I charge, which is very much compared to a lot of the folks out there on crypto Twitter. And then if you do come into this, then you get access to our library, which is updated every week with more videos, and you get access to this. So within this, what we can see is we've got various different types of trading, right? So we've got here, we've got Fibonacci. Now some people use Fibonacci by itself. They don't use anything else. They just use Fibonacci. So there's Fibonacci retracements like we've just seen on the chart prior. We've got extensions, we've got fans. You know, there's various different things with Fibonacci. Then we've got volume analysis. So for example, if you guys watch my videos, you will see that I always throw on a volume profile because I like to see where the bulk of the volume is, because that factors into my trade. Now again, people will trade purely on volume. People will trade purely on patterns, standard patterns, harmonic patterns. People will trade purely on order flow. You know, reading what's happening within the candles. You know, people will trade purely on Elliott wave theory. You know, they might not take anything else into account. They'll just do Elliott waves. You know, there's many different styles, and the reason why I trade the way I do as a confluence trader is because basically all I do is I overlap as many of these as possible to find the best entry. And the reason why I do that is because the more people that are looking at a level with their own TA, whether that's EMAs, whether that's Elliott wave theory, whether that's Fibonacci, whether that's patterns, SR levels, ranges, the more people looking at a level, the more chance it's got to react, which is why I'm a confluence trader, and that's what I teach. That's what I teach my private members, how to be a confluence trader. However, there's nothing stopping you looking at each one of those modules and building your own strategy from that. For example, you might want to mix volume analysis with Elliott wave theory, or you might want to mix volume analysis with Fibonacci, as an example. Okay? Or you might want to use an indicator strategy because you find it easier to use. In that case, that's fine. But what you want to do with that then is making sure that your risk management's in place. So it's all about bringing everything together and figuring out what is going to suit you. Okay? So there's no right or wrong answer. The only wrong answer is when people say something like, use my indicator, it will make you 100x return every trade. So when someone screams something like that, then we know that it's absolute crap. Okay? Because nobody can make those sort of promises. It's all about what suits you. You can take a bad indicator and still get a good return out of it, but you need to understand how to use it. Okay? So figure out what works for you, pick a strategy, work on it, back test it on a paper account until you get the results that you're looking for. Okay? And then once you get the results you're looking for, then start trading with it. And then over time you can adapt it and you can tweak it until it gets better and better and better. Okay? And then you also need to understand what works in each market. So trend strategy, great in a trending market. Range strategy, great in a bear market / sideways market. Okay? You may have multiple strategies like I do. Okay? Either way, see what works for you and make the most out of it. Alright, gang. As you were. Bye-bye.